of your funds at this point, and that stock has had a pretty phenomenal year.
In those two stocks, in those two funds, it's a very important part. It represents, as you said, 35 or 40% of each of those funds. And that stock is up 10 times in the past 2 years or 3 years. We invested in it between 2014 and 2016. We invested $300 million, $320 million for 1.6 million shares. At that time, it's now 8 million shares, 5-for-1 split. So it's $40 a share, as you said. And the stock's now 400 or 420. And when we invested, and I was on your program, I was talking about how I believe we would make 20 times our money over 10 or 15 years. And so far, in the first 4 or 5 years that we've owned it, the stock went up and down like a yo-yo, and that would be expected because what they were doing is they were building facilities, hiring people, coming up with design. It's a reasonable thing to bet against them. All these car companies, 50 of them have failed, and this guy somehow had made it through sheer willpower and raised capital. Now he has 50,000 employees, and he has factories he's building on 3. I want to get to Tesla too, and I want to answer your news question. But Tesla's now building on 3 different continents, building in the United States, building in China, building in Germany, and you should expect more factories to be built continuously over the next 10 years.
Last year they did. Okay, I'm sorry. Well, it's certainly gotten bigger and steadier, but you mentioned the volatility. Do you think the stock has passed the days of volatility because it's gotten on steadier ground, or do you worry that some of the Robinhood investors and others who have been so attracted to what Tesla has to offer, if there's any sort of shakeout in the market, does that impact them, and would volatility come back?
Well, what we worry about are not stock prices. When we're an investor in a business, we worry about the business. And the short term, I can't have any clue about what's going to happen. I do think that it's now a $400 billion market cap. It was $40 billion when we started. I've said for a long time, I thought it was going to be $1 to 2 trillion with what developments have taken place recently. I think 2 trillion is the right number. So I think it's 5 times from here. Made 10 times in the past 2 or 3 years, but for 4 years before that, the stock didn't change, and the business grew tenfold. So the business went from $2.8 billion to $30 billion 10 times. The stock price didn't change. Now the stock price just caught up to where they were. Now I think that the business is going to go from 30 or 35 billion in sales, grow 50% a year. I think they're going to be doing 5 or 6 or 7 or $800 million in sales in 10 years on just the cars. And the batteries is another unbelievable business, which I'm very excited about. And I think that with that kind of valuation, with that kind of results, you're going to see a 5 times appreciation. I was thinking 3 to 5 times. We made 10 times so far, 3 to 5 times to come in the next 10 years. Two more doubles, maybe 3 more doubles in 10 years is what the expectation is. So we're very excited about that.
This is Ron Barron from Barron Investment, who was interviewed to CNBC just yesterday, discussing the reasoning and the logic and the present and the future of the Tesla company, and basically saying that the Tesla, I mean, if you look in between the lines, I'm going to put another part of what he said. If you look in between the lines, the message is the Tesla stock and the Tesla stock price and the Tesla stock now and past and present, the future obviously, is just a manifestation of what Tesla is. Because when you buy a Tesla stock, if you've been invested in Tesla stock like I am in the past year or so, or 5 years or 10 years, depending how lucky and future thinking you are, you will know that if you look at the day-to-day of the Tesla stock, you will absolutely go insane. But the genius of Ron Barron, way back in 2014, to invest in this company Tesla, is because he understood that this is not about selling cars. I'm driving a Tesla car right now. It's not about Tesla cars. It's about the technology and the paradigm shift that Tesla is representing. Just the battery and the energy component of what Tesla is and what Tesla is going to be, That's where the $2 trillion is. That's where the money is going to be. That's where the valuation is going to be. So if you're, I have a good friend who that's all he does. If you buy and sell, you know, you may win some, lose some, you don't know. But if you understand what Tesla is doing, the last analyst and the last people you're going to go for advice is analysts of automotive companies, of automotive stocks. Because this is not about automotive. This is like, if you watched the Tesla Battery Day, if you didn't, you should. And you really watch it again and again to understand what they're saying. They are changing the world, and it's only about the battery, the size, the density, the manufacturing, the availability to create tremendous amount of energy in a smaller and smaller space, bringing the price down to $50 or $60 kilowatt hour. That is unbelievable. I'm not a technical person, I'm not a scientist, but even I understand that concept, that what they're doing is not about cars. Cars is the conduit, the vehicle, literally speaking, the vehicle who is going to take them to what they're going to do, which is technology, autonomy, ride sharing, energy, power, renewable. That's what they're doing. And you know, it's great to see Ron Barron and people like him understood what is this all about from the beginning. Listen, it was not easy. I came, in my opinion, too late into investing in Tesla because, you know, I just didn't know. I'm not but you know, the more you see, the more you understand what they're doing. And you know, I'm in for the long run. And I don't suggest or give anybody a recommendation, but this is a really great American story. Here's some more from Ron Barron.
If you think something like Tesla is going to go from 30 or 35 billion in sales to 600 or 700 billion in sales in 10 years, so 20 times, and is that overpriced right now? How many businesses that you think are like that? And then when you think about their business, they have, when they did this battery day, they described how the suppliers weren't keeping up with them. NVIDIA wasn't developing the chips fast enough, so therefore they had to develop their own chip. And the reason NVIDIA wasn't doing that was because they were supplying other car companies who didn't need the chips as rapidly as Tesla.